If the market starts slowing down, people might be more apt to selling, right? Right now, they're seeing the appreciation and everything going up, and you don't want to miss the boat.
You're very experienced in real estate as an investor, as a lender, as a broker. So you've got a unique, balanced experience across multiple different sides of the real estate market. What are you thinking about? Because interest rates, they've doubled really over the past few months. Still have low inventory. We still have high demand. We're still in certain markets having multiple offer situations, or at least the low inventory. Like I think in Houston alone, it's like what 1.5 or something. So what are you thinking is going to
But
turn
what
out over the next 12, 24 months?
a normal market's about 6 months of inventory, right?
Mm-hmm.
So we've got a lot of slowing down before we get there. So I saw something they were talking about. Dallas is starting to talk about not allowing investors to buy properties.
I saw that. I don't know how they pull that off in Texas, but yeah, I saw that. And
So,
so, and that came off Canada. So Canada banned foreign investors for 2 years.
and I think California was talking about it, and now I guess don't count my Texas. But now we got. I mean, the rates are still historically low. Everybody's complaining now getting five, touching sixes, but I mean that's still a historically low rate. We're going to be.
And by historically low, what you're referring to is you pull out 30 years of rates, and it looks like a stairs going downward all the way to the rock bottom, which was 6 months ago, 4 months ago, which now we're still maybe one step up from that.
So I mean, what Richard was talking about, a shortage of housing. There's always been. You listen to these economists, they're talking about there's been a shortage of developmental loans and things like that since the 80s. We just haven't been keeping up with the demand of housing. And so that's some of those economists think that we've still got a shortage to fill with more housing. So I still family. I like the liquidity with houses. So if something happens, I can still always put the buyer, rehab, owner finance, whatever it may be. The amazing we in prices as it's been crazy, but it's been good if you own some assets. You can't expect the low rates and this appreciation to continue. Eventually, slow down. And with these increases in rates, I think they're trying to slow it down.
Well, what are your thoughts here? So, I've heard a couple different contrarian views on the low inventory. I haven't dug deep into the data because it wasn't readily available. But essentially, what they were saying is we don't have shortage of inventory. What we do is have consolidation of inventory that investors own, meaning single family, which investors have been buying that up, in larger percentages over the last, 5-8 years. But then you got the multifamily side too, which the development on multifamily has really been driving the development of all residential. It's mainly been multifamily because we haven't been keeping up on the single family side. So their argument is we actually have ample inventory. It's all tied up. It's not on the market. I don't know if you have any data or if you've seen anything that kind of validates that or any commentary on that.
When you say all tied up, you mean
it's off market? Like they're not selling right now. So before COVID, there was still a shortage where I think in Houston, it was around 3 or slightly below 3 months of inventory, which is still below the 6 months. And then COVID happened, it dropped below 1 month, and it's been inching its way back up, but still below pre-COVID levels.
Yeah. If the market starts slowing down, people might be more apt to selling, right? Right now, they're seeing the appreciation and everything going up, and you don't want to miss the boat, right? So I don't. If there was plenty of everything, then there would be plenty of stuff for other people to buy. I guess is one thing. As y'all touched on the below medium price range houses, heck, the medium price range has gone up. I don't know exactly, but it seems like it's gone up almost 100,000 in the last couple of years.
Yeah, it's over 350 now, right? In Houston?
It just doesn't seem that long ago. It was 260 or so.
Yeah.
So, I mean, from investment, I don't think you can get hurt by we'll slow down after every inflationary period, there's a recessionary period. And they've dumped so much money into the economy for so long to keep it afloat. We bull market, if you will, prosperity or whatever you want to call it, for longer than we normally have. They've been pushing it through. You got the blip for COVID, but they have to if we have an adult in the office, whichever party's in there, we have to put the brakes on inflation. And to me, nationally, it's not going to feel good. But we're in Texas, so I kind of like, I kind of go both sides, right? I have the little angel said, "Oh, we have the population, we're still affordable place to live, this, that, the other." The other side of the coin, I'm like, well, we've run up a lot faster than we did in 08 and 09. So maybe if fall, we might have more to fall than we did back then. So
Yeah.
I'm kind of conflicted, and I think now's the time. If you're going to sell anything, sell the stuff you don't want. Sorry.
Yeah. So, I mean, so if you don't have to move, if it is that secondary house, go ahead and cash in. You're okay cashing in. Now, if you're worried about what you're going to do with the money, then maybe you hold on to it, presuming you don't need it. That's what I've been told. People ask, "Hey, should I sell now?" I'm like, "Look, do you need the money?" No. Well, then do you have someplace you're going to put the money afterwards? No. Don't sell. Like, if you need the money, sure, cash in. If you have another place to put the money, another investment opportunity or whatever, another house.
You need the money to do a cash out, right? And you don't have the tax.
Yeah, 100%. Yeah, and then that's tax free.
Right. So, there's that, and you still have the assets, so you still have the investment.
Yeah, we did that a couple times last year.
Yeah.
We actually were going to sell a house, and then when I went back to check the comps, I'm like, holy cow, we can refinance at the same price I thought I would be able to sell it at.
I pulled out $1.7 million, 50-something properties just under a year and a half ago, and I'm putting them on 15, 20-year notes, so that's paying down some. But I could darn near, not quite all the way, but I could pull most of that back out again already, just because the appreciation is
Yeah.
no, I the real estate, or I say single family. The reason why they're buying, but I think it's a number one asset class to be in moving forward, and that's why they're gobbling it up. Plus, it's hard assets, and instead of a paper asset like the stock market. So if you got cash flowing real estate, I think it's a good position to be in. I mean, that's why they're buying it up. The hedge fund.
Yep, and seems to be the consensus of the most of the guys. So, well, I appreciate it, Blake. You got a lot of experience, so I'm sure some folks got a lot out of that, and look forward to seeing you at one of the events again here soon.
Yeah, we're past COVID now. We can see each other, right?
Yeah. They were actually doing hugs at an event I was at last time. It was like, kind of felt a little weird, but once you get over that, yeah, we're all right.
Oh, I'm not wearing my mask while I'm on a video call. All right, buddy.
All right. Thanks. Take care.